Wow, today was a crazy day with the stock market. Every single time I look down, something's up, something's down. The whole market was not acting together and something started separating some stocks. Literally, I checked the market 4 times today, and the same stocks up, down, up, down, up, down. Pretty crazy. So what the heck is going on right now? Let's talk about some statistics and try to come up with some conclusions. First of all, this Friday will be CPI data, the Consumer Price Index, which basically shows how much inflation there is in the United States. We know that in June, we're going to be having a 50 basis points rate hike from the Federal Reserve. We know that in July, we will have a 50 basis points rate hike. August, they don't meet. September, we're assuming it will be 50 basis points. Let's say it won't be 50 basis points, it's going to be 25 basis points. Or let's say it will be 50 basis points, but the next meeting, it now becomes 25 basis points. What will happen to the market? I think the market will start rallying. Am I saying that we're out of the woods? No, I'm not saying that. I still think that there's a huge possibility of the market tanking. But I'm just giving you guys some scenarios, and that's what investing is about. Scenarios. CPI data comes out on Friday. I will be doing it live Friday morning. Definitely join my channel. CPI data came in at 8.3 last month. The month before that, 8.5. Before that, we had CPI that was going up, inflation, then it started coming down, and then boom, 8.5. If we reached an inflection point at 8.5 inflation and now inflation is going down, I truly believe the Fed in September or the meeting after that will only be raising interest rates by 25 instead of 50 basis points. We did have a jobs report last week. The jobs report was good for America because we have a lot of jobs, 360,000 jobs, 390 off the top of my head, but we didn't increase unemployment. We need to increase unemployment to reduce inflation. What's good for the country is not necessarily good for the stock market. You see, Jerome Powell and the Fed, they look at the employment rate. And if the employment stays the same where everybody has a job, well, they're not going to be scared of a recession, which I think we're already in, and they're not going to stop raising the interest rates as aggressive as they are. It's going to be very interesting to see what's going to happen on Friday based on this jobs report and based on the inflation, and then we're going to see what the actual Federal Reserve is going to do. The question is, are we out of the woods yet? I don't think we are, but we're showing signs of some strength. But those signs can be super deceiving. We still have crazy inflation, we still have crazy gas prices, and we still have a crazy freaking war in Europe raging between Russia and Ukraine. Now, I think ultimately this war is going to be really, really good for a company like Palantir that I'm invested in. So we're going to see what ends up happening. I am buying stocks. I'm just not buying stocks right now. As I said before, for Tesla, I'm waiting for Q2. Palantir, I'm going to keep adding. Unity, I'm going to keep adding. But I'm going to see what's going to happen after this CPI report. If the CPI report comes out and we have like 8% inflation by some miracle or even 7 point something, I will start buying stocks again because I think the market can turn. What a lot of people don't understand, I'm not saying the market will turn. I'm just trying to say that we have some unprecedented times. What does that mean? We had the fastest decline of the NASDAQ ever and the fastest decline of the S&P 500 ever. Usually a recession lasts a year. Keyword, usually. But we never have such an accelerated decrease of the stock markets either. So since we had such a strong accelerated decrease, maybe we're going to have a shorter period during the bear market. Maybe we're going to have something called barcoding where the market neither goes up or down and stays in a very tight formation. I was watching an interview with Cathie Wood. She is the CEO of ARK Invest. Now everybody hates on her, but she was the famous bull that predicted Tesla, that it was going to go up to where it was. Everybody laughed at her, and she believes in innovation. She's saying that the Fed increased the federal fund rate from 0.25 to 1, which increased it by 4x. She says that this is a super aggressive increase. She says in the late 70s to early 80s, the Fed increased from 10 to 20%, but that was only a 2x raise. So she's saying since we started at such a bottom of 0 to 0.25%, and we already raised 4x to 1%, and the Fed wants to raise to 2.5%, which would be a 10x from the original amount. She's saying the Fed might be a little bit too aggressive, a little overzealous with the increase, and they're not allowing the raise in interest rates to actually take effect in the economy. She's saying that they might be a little bit too aggressive, and what needed to be done is already done with this economy. I'm not sure if I agree with her, and I'm not sure if I disagree with her. I'm also telling you guys, I'm not pumping anything, and you guys got to make your own decision. I could only give you guys statistics and data. You guys got to make your own decision. Let's give you guys some stats. $30.5 trillion is how much the United States owes. That is our current deficit. If you break it down into citizens or tax-paying citizens, we got 91,000 per every single citizen and 242,000 per tax-paying citizen. That is an enormous amount of debt. The average year-over-year earnings went up by 5.2% versus inflation of 8.3%, which means that the raise in salary does not correlate directly to inflation. And this is called wage spiral effect, where you're never actually going to catch up to inflation. And no matter how much you raise somebody's salary, inflation is always going to outpace it. And then you're going to keep asking for more salary, and then inflation keeps going up. 2/3 of Americans are living paycheck to paycheck, as opposed to the same study that was done a year ago. 1/2 of Americans were living paycheck to paycheck. And 1/3 of Americans that make $250,000 or more are living paycheck to paycheck. You see, living in America and making $100,000, six figures, ain't what it used to be. But take all of these articles, take all of these statistics, and take it with a grain of salt, because at the end of the day, you're never actually going to get the truth in front of you, including the CPI reports. This 8% inflation, 8.3, is truly probably 10 or 12% inflation. Guys, I'm not a financial advisor. I'm purely an entertainer and educator at best. I like to give you guys these little updates, give you guys these little statistics, just so you're appraised of the situation. It's good to educate yourself and work your mind, because working out your brain is just like working out your muscles. If you're not doing many repetitions, you ain't really getting a good workout. Thank you.